What's up, bro? Uncut Trading episode 2. We are live. So, just like I promised you guys, I deposited $10,000 into a live account with a regulated broker. So, before I explain to you guys this whole trade that I took, I want to show you guys like some proof. Okay, so first of all, look at this. IG. I was considering what type of broker should I go with. So there was top 3 options when it comes to regulated and licensed brokers: Forex.com, Orendal, and IG. And I decided to go with IG because like I've already used Orendal before. So Forex.com and IG is like other brokers that I want to try this year. So you can see it is regulated by the Monetary Authority of Singapore, which is like the Feds in Singapore. And you can see I deposited $10,000. Alright. So purely live account. And I wanted to make sure that I do it on a live and regulated and a licensed broker, because I don't want to do it on some shady, unregulated broker where I can just manipulate the numbers or some shit like what trading gurus does. So 100% transparency to you guys. So let's go back to the charts. Before I talk about this trade that I took, which is the first live 2024 trade that I took on this 10K account, I want to share with you guys my trading plan. You can see this is my trading plan for 2024. When I sit here and tell you guys to follow your trading plan and to even create one if you don't even have one in the first place, I practice what I preach. I walk the talk. I lead by example. That is something that I've always believed in. So this is my own trading plan. And you can see, like I said, in 2024, I'm more catered towards like swing trading because I'm past the scalping phase, right? The scalping phase is more like not really for beginners, but it's like more for people who are more aggressive, and it's no longer my trading style. I'm more calm and much more busy with other business right now, so I'm opting for swing trading, right? Which means I'm holding the trade for up to a few days or even a few weeks. And you can see the time frames that I'm using is weekly, daily, 4-hour time frame, and even a 1-hour time frame for precise entries. I didn't say sniper entries, I said precise entries. So if you go to my charts, right, you can see I have already removed 15-minute time frame from my favorite time frames. So right now it's just all the higher time frames: weekly, daily, 4-hour, 1 hour. Right? Like I said, I want to ignore the noise in the smaller time frames. On the 5-minute time frame, price will be jumping up, down, up, down, up, down, up, down, and there's a lot of noise. The higher time frames you go, the less noise there will be, and the more you are focused on the actual market structure of price. That is why I am really just focusing more on higher time frames, because those are time frames that really matter and have the most strength. And I will also have this rule where I will hold a oh my god, go away. I also have this rule where I have to hold a trade till my take profit level, and I don't care about the days. This is what I mean set and forget, right? You always hear this term, set and forget. And I've never really understood what it means until when I'm swing trading. Basically, I enter for the trade, and then that's it. I just forget about the trade and just trust my analysis and let the trade play out. Let it do whatever you want to do. Whether you go to my take profit or my stop loss, whatever you want to do, trust my analysis, and I just, let God take his will. So that is for my swing trading, right? And then next for my risk management. Now, when it comes to risk management, I am trying something a little bit different here. You can see this risk management strategy is a little bit different compared to what I usually does on a regular basis. So for the past few years, what I do is that I'll risk about 1% to 2% on each trade. And it doesn't matter if it's high probability, low probability, or medium probability. Sometimes actually on high probability trades, I'll risk a little bit higher. But I didn't have like a specific percentage in mind. Until about this year, I have like this new rule. You can see I'm risking 1% to 2% on each trade for medium probability setups. And I'm completely avoiding low probability setups at all, like completely. That means if I don't see any trading opportunities, I will not take that trade, right? It's similar to what I mean like this week. So for this week, right, this is the only trade I take. In this entire week, 5 working days, I only enter for one trade, and it's on GBP/USD, because that's the only opportunity that I saw. I analyzed the other currency pairs, and I didn't really saw any trading opportunity that present itself for me to enter for a swing trade. So I didn't really took any other trades. So yeah, I'm avoiding low probability setups completely, right? This is so that I can really preserve my capital and stuff. And then I'm risking 5% to 8% on high probability trades, right? So I am actually risking more on high probability trade setups because I have a higher risk tolerance now. You see, $10,000, a live account, 10K account is like chump change to me. It's like play money, right? So to me, when it comes to trading this 10K account, I have a higher risk tolerance because I'm okay with risking $500 to $800 on each trade. But you might not be okay with that, right? You might only have $500 in your account. In that case, you shouldn't be risking your whole account on one trade, right? It depends on your risk tolerance and your personality as well, and your risk appetite. All this stuff have to take into account. But basically, I'm okay with risking a much higher amount of money, right? I'm okay with risking $10,000 or even $15,000 on a 100K account, right? When it comes to high probability trade setups, which are very, very rare, you have to double down on them. So that is my risk management strategy, and also move my stop loss into profit depending on the scenario. So for this market mechanics trading strategy, right, it's a very important concept, and I think I'll cover that in the next episode. But basically, you will learn things about market structure, supply and demand zone, candlesticks pressure and momentum, and market shift, time cycles. All these new concepts, I've never really taught them before on my channel. But let me know what you guys think. Maybe I'll do like a complete free mentorship playlist where I go deep dive into each one of these confluence right here. And I got my additional confluence and stuff. And then also the exit criteria. Yeah, but basically I don't want to cover the trading strategy this lesson. I'll cover that the next episode. Next, look at my trading journal. This is my trading journal. You can see right here, it's loading, it's a little bit loading. So this is my trading journal. Like I said, I practice what I preach. If I ask you guys to be disciplined and record and journal down your trades, I do it myself. So you can see I started my 10K live account. I was just writing down my thought process, and I accidentally entered for like a 0.2 lot size trade. This was just like purely testing, right? I was just testing to see how the live account is doing and stuff, and I kind of do it on like a little bad trade, right? It was on AUD, USD and stuff, and it was not the best trade. But actually, the trade ended up going in my way. Like after I entered for this sell, after I got out of the trade, price went down. So I missed out on the opportunity, even though I could have made like a few $100, but I missed out on the opportunity. It is what it is. Sometimes we miss out on opportunities. So most importantly, I want to cover about this trade right here that I took on GP USD, the multiple confluences. So this is like my thought process and stuff, and let me just explain to you guys. So when I look at GP USD, this fresh currency pair, right, you will see that if you go down to the higher time frame, like what we always do, I always preach, start from the higher time frame and then go down to the smaller time frame. Do your top-down analysis. So you can see your daily time frame, right? You will see that price is in the uptrend, right? Price has been in a very nice steady uptrend that we have over here. How do we know that? We know because price is creating a higher highs, higher lows, higher highs, higher lows, higher highs, higher lows, and potentially another higher high, higher low, and then this is another higher high, but there is no higher low. You can see this low, this is the last higher low, price is around at the last higher low. So I went down to my 4-hour time frame, and actually before I went down to the 4-hour time frame, I could draw a Fibonacci right here, which is exactly what I did, right? I drew my Fibonacci from the swing low to the swing high right here. So point A to point B right here, and I saw that price has managed to retrace to this 61.8 retracement level. And just nice, this 61.8 retracement level lines up with a demand zone. So if you go down to the 4 time frame, you can see I actually drew like a demand zone like right around this area here. Whenever price comes back down to this area, it go back up. Comes back down, go back up, like multiple times, right? That means it's proven to us that there are buyers waiting for us at this key demand zone right here. So in this scenario, that was the first confluence, right? The first confluence was the Fibonacci. Price was at the negative 61.8 retracement level that we have right here. So I went down to the 1-hour time frame to look for my entry. So once I went down to the 1-hour time frame to look for my entry, bear in mind that price was like somewhere right around here. I was waiting for a market shift. Market shift basically means that price is going to reverse from a downtrend to an uptrend. So let me just put down all the confluences that I have right now. Now price was at the 61.8 Fib retracement level. So that was my first confluence, right? Price has managed to come back down to this 61.8 retracement level right here, and it's gonna reverse and head back up, right? Second thing was that price was at a demand zone, right? Price was at a demand zone, and then our third confluence was that I was looking for a market shift. And how do I know where is the market shift? You look at the candlesticks. Right, like I said, all indicators lag. Let me repeat myself. All indicators lag, which is why I don't really like to depend too much on indicators. You can see right here I have my moving averages, but I don't really depend on them. I use them as an additional confluence. Like if I really don't have any confluence, they can act as an additional confluence, but I never ever depend on them. What I rely most on is price. That is what all trading is all about. Understanding price, understanding who is in control of price, whether it is the buyers or the sellers. So we do that by really looking at the candlesticks, right? So if I look at these candlesticks right here, right, price gave us huge bearish candlesticks right here. You can see right here, price was just giving us a lot of bearish momentum and pressure. How do we know that? We saw big ass bearish candlesticks right here. So you can see selling pressure starts fading away somewhere right around here. Somewhere right around here, what we saw was that there was a lot of wicks. What does wicks tell us? Wicks tell us indecision. Wicks tell us that this selling pressure that we have initially is about to fade. Right, it's about to fade, and the buyers have entered the market, the bulls have entered the market, and it's about to push the price up now. So at this point of time, we are waiting for the market shift. We are waiting for some sort of bullish momentum and bullish pressure to come inside the market, and then that is when I will enter for a buy, which is exactly what price shown us somewhere right around here. So somewhere right around here, right, price actually created like a double bottom. So once price created a double bottom right here, this was additional confluence, right? This was additional confluence. Most importantly, there was a market shift happening somewhere right around here. I entered for a buy somewhere right around here because I saw that price was reversing and price was creating a bullish momentum. You can see price starts to show more bullish candlesticks right here. More bullish candlesticks right here that tell us that, okay, buyers at this demand zone, buyers at this retracement level is about to push the price up. So I entered for a buy right there, and that is the fourth confluence is bullish candlesticks or momentum. Right, basically I had multiple confluence, multiple confirmation that tell me that I should have entered for a buy right there. And I knew that, okay, if I enter for a buy right here, I'll get a pretty nice entry, right? It's not the best entry. I'll believe that the best entry would be if you entered somewhere right around here. If you enter somewhere right around here, maybe like somewhere right around here, right before the liquidity happens, that would be the best entry. Or maybe even like right here. But like I said, I'm not focused on sniper entries anymore in 2024, right? I'm more focused on not missing out trading opportunities. That means even though I don't get the best entry, I'm still going to be entering the trade if there is an opportunity, right? So, yep, that is why I enter for this buy right here. Place my stop loss below the demand zone, obviously, and then place my take profit all the way up at the next supply zone. The next supply zone is actually right here, right? But there is another supply zone right here. So if I were to have a different play, which is to have two take profit levels, right? I'll place my first take profit right here, second take profit right here. So what happened over the next few days was that price started going to a drawdown immediately after I entered for the trade. Like I said, it's not the best entry, but I wasn't fazed by this shit right here. You can see all these wicks, all this like uncertainty going on right here. I wasn't fazed because I trust my analysis. I set and forget. I placed my stop loss. I was like, okay, you know what? No matter what, there's only two ways I'm going to get out of this trade. Either price hit my take profit or price hit my stop loss. So enter for a buy right here. Price went to a drawdown immediately, not really fazed by that. And then price started going in my way after about a few hours, right? After a few hours, price started going in my way and price got pushed all the way up here. And then it starts retracing. Now, once again, when it starts retracing, right? This is what I call somewhat of a manipulation. I wouldn't really count it as a manipulation-ish, but it is somewhat of a manipulation. Let me explain. So it comes down to the concept of time cycles. So what is time cycles? Time cycles basically means that during each trading session, price moves differently. So that means price can be bullish in London session and then it can be bearish in New York session. So if you look at in this case right here, right? So from about 6 a.m. right here, 6 a.m., about 6 a.m., somewhere around here in the morning time, right? This was the Asian session. Asian session price was pushing up, and then followed by London session. London session price was pushing up even further, right? Because the liquidity come in, push the price up even further. And then when the New York session start, right, somewhere right around here, the New York session will push the price all the way down here. At this point of time, this retracement happens. It's going to fake out a lot of retail traders into thinking that this is a reversal. So a lot of retail traders was thinking like, oh my god, price is retracing so deep. Maybe this is a reversal. Maybe I should enter for a sell. And then they enter for a sell or they get out of their buy position right here, just to realize that this was actually, the overall trend was actually an uptrend, right? Basically, this is what I call really like the manipulation. So you can see London and Asian session price was bullish, and then during the New York session price was bearish. So it all comes down to really understanding what is the best time to trade and stuff, and that is time cycles. So I want to talk about this long wick candle right here. I recorded a video when this happens, right? So actually about 9:30 p.m. on Friday, non-farm payroll come out. So when it came out, I told myself, you know what, I have to record this moment. So I took out my iPhone and I recorded the whole movement. So right now it's about 9:30. The news is about to come out right here. You see non-farm payroll pending. It's about to come out right now. So right now we are still inside the GU trade, as you can see right here. You can see we're about to hit our stop loss. Yep, but I guess it's negative news for GU. It is what it is. We'll still observe to see where price is gonna go. Like I said, right, once you have your stop loss in place, it is what it is, right? Even if you lose the trade or win the trade, we always have 50-50. So right now it seems like the news is going against us, and I have my stop loss in place, so I'm not really afraid of anything. Worst case scenario, like I said, lose about 2%. And you can see in that video, price almost hit my stop loss. Like literally price went all the way down here. I was so ready to get out of the trade with a loss. I was just like, it is what it is. You know, I risked 2%, just get out of the trade. But then at that moment, price literally reversed. Right, after about a few minutes, price actually reversed and created this long lower wick right here. When I saw this long lower wick, I knew that this was classic news manipulation. Price was about to reverse and hit back up right now. So you can see exactly what price did. Price gave us huge bullish momentum and followed by another huge bullish momentum. So eventually, after the news, price actually went up to go to our first supply zone over here, just like I expected it. There's a reason why I drawn this area right here, because I expected price to hit this supply zone. And you can see after price hit this supply zone, sellers come in, push the price down, and right now price is right here. And I'm still holding on to the trade. Right now, I'm only up about $500, but like I said, the money doesn't really impact me at all. Like, I'm just thinking in terms of percentage and stuff, and yeah, that is for GP USD. Now, I just want to introduce you guys to some new currency pairs to the family, the watch list. So we have USD Swiss franc, we have USD CAD, we have New Zealand dollar USD, and Euro Swiss franc. I was researching on what are like the best currency pairs to swing trade, and these 4 new currency pairs just came up, and I've never ever touched them in my entire life. For the past 3 to 4 years of trading, I have never ever traded any more of these 4 currency pairs at all. So they are quite kind of new to me. So I'm as new to them as you are to them. So I'm just gonna go through them briefly on what my analysis are for these 4 currency pairs. Like I said, I've never traded this shit before. If you watch all my videos, you will notice that I only trade AUD USD, Euro USD, Gold, GU, and then not really USD JPY, but these are the 4 main currency pairs that I've been trading for the past 3 to 4 years, and I've just been focusing on these 4 currency pairs. But like I said, we are swing traders now. We are swing traders, so we are going to play with swing trading currency pairs. We're going to trade swing trading currency pairs. The pairs that are the best for swing trading. Anyways, USD Swiss franc. Let's take a look at this. So USD Swiss franc was in a bearish downtrend, right? You can see very clear as day bearish downtrend. So we know that by seeing that price is creating low highs, low lows, low highs, low lows, low highs, low lows, low highs, and lower lows. But at this point of time, it has reversed and it has came up here. And I think it's potentially creating a new lower high right here. Right? Potentially price could be creating a new lower high right here. So we could easily draw a Fibonacci from point A to point B. You can see price has retraced to this 78.6 level. And if you go down to 1 hour time frame, you'll probably see like some sort of supply zone at that area as well. Somewhere right around here. Somewhere right around here, there's a supply zone as well. And you can see supply zone and price is retracing to this 78.6 retracement level. And at this point of time, right, I'm quite bearish on USD Swiss franc because you can see clear as day. If you go down to the higher time frames, it's super bearish. And if you actually go down to a weekly time frame, maybe you can draw like another key level somewhere right around here. You can see. I'll say right here, there is actually a psychological level right here at this 0.70. Okay, so psychological levels are basically whole numbers. You can see like those really whole even numbers. So psychological levels at 0.7, right? And right now price is somewhere at around 0. Is it at 0.8? No, it's somewhere around 0.84, right? So 0.8 is another psychological level, and then we have another psychological at 0.85, somewhere around here. You can see the price is at a major psychological level right now, 0.85. So we are expecting to see price does a few things, whether it can hold this level or it's gonna break past that level. The last time price was down here, you can see price actually reversed and hit back up, right? There was a lot of demand at around this area, which probably explains why price is reversing at this area right here. I'll say we still have to see, right? For this, we still have to see, because from the looks of it, price has broken past the 0.85 psychological level, but at the same time there is demand at this area, and price created like a little double bottom right here, double bottom, and it starts consolidating around here. I just want to quickly rant about chart patterns. You can see double bottom right here. You cannot use chart pattern as your only confluence, right? A lot of people have this misconception when it comes to chart patterns. They see a double bottom, they immediately enter for a buy. They see a double top, they immediately enter for a sell. They see a triple bottom, they immediately enter for a buy. They see all these weird ass wedges, triangles, Bermuda triangle patterns, they immediately enter for the trade. You must understand that all these chart patterns, they are maybe accurate about 40% or 50% of the time, right? They are not going to work all the time. That is why you always must make sure that you need to rely on other confluences, other confirmation, be it candlestick patterns, or market structure, or Fibonacci, or key levels, or supply and demand zones. You need other confluence. You cannot just purely rely on chart patterns. This is the number one, or maybe not number one, but this is a major mistake that a lot of traders make. They learn some chart patterns from textbook, and on textbook, it looks great, right? You see price just going up immediately after this, then they go down like this. Come on, man. If trading was this easy, everybody would be driving a Lamborghini around the road, but you don't see that happening. But basically, this is my analysis for USD Swiss franc. I'm expecting price to do a few things right now. Price is just consolidating right here. Either it break up to the upside or break down to the downside. But at the same time, right, you can see there's a little bit of bullish momentum right here. But price has come up to this demand zone, this supply zone, and yeah, it's just consolidating around this area here. We'll just have to see where price go over the next few days, because at the same time, right, it's not as easy as it comes down to I can just easily short because this major downtrend is going down. It is also at a psychological demand level, a demand zone, so it's a very strong demand zone. So we'll just have to see and play by ear. Next, USD CAD. So for USD CAD, right, similar, it's pretty similar to USD Swiss franc. Price is creating a bearish downtrend, and it can also draw like a little demand zone somewhere right around here. You can see there's a very strong demand zone, and price has come back down to this demand zone area as well, and we can see there's buyers entering the market as well. And actually for this, seems rather bullish, right? I can see draw like a little level right here, and then another little level right here, right? So price is consolidating. Like I said, this is quite similar to USD Swiss franc. So same thing, I wouldn't do anything, right? Price just consolidating around this area, right? What I want to see is proper market structure. So I want to see price breaking past this last lower high here. So break past this last lower high, come back down to retest this last lower high to create a new high low, and then that is when I can confirm that this is actually a bullish uptrend and price is going to reverse to become an uptrend, right? This is the market shift I'm talking about. But until that happens, there's nothing much I can do, right? There's nothing much I can do within this range right here, because this is the scenario one. Second scenario is that price could easily go down, right? It just continue with this downtrend, this major downtrend right here. So New Zealand USD, honestly, New Zealand USD price just consolidating. Look at this shit, man. Price just consolidating right here. And when it comes down to consolidation like this, I don't trade. As simple as that. I do not trade consolidation, because consolidation, it can either break to the upside or it can break to the downside. And I will only trade after either one of these moves has presented itself, whether it breaks up to the upside or downside. So stay off the market for NZD USD. And then for Euro Swiss franc, another freaking consolidation. So I am not going to trade it, right? Once again, as simple as that, right? When it comes down to consolidation, I prefer not to trade at all. I just be patient and wait for a proper trading opportunity. That is how I trade. I just try to stay off the consolidation as much as possible, because I've learned the lesson the hard way. So basically, USD, Swiss franc, I would say that I wouldn't say bullish or bearish. So yeah, I wouldn't say bullish or bearish, because we have to see what is going to happen next. Same thing with USD CAD. And then for NZD USD and Euro Swiss franc, I'll just not trade at all. And then for GBP USD, I'm actually quite bullish on GU to go up to my take profit level right here. But at the same time, you never know what price is gonna do, so we have to play by ear. Price could even continue consolidating around this range for quite some time. So yeah, you just see how it goes. Tea time, hey. So like I said, with all uncut section, we need some tea, right? So that I can really just talk calmly with you guys and make sure you cover the tag. You can't see the green tea tag, right? Don't want to promote any free shit right here. So, welcome to the uncut section. Now, I want to talk about the biggest mistake that traders make. The biggest mistake that traders make is not risking too much money on one trade, or it's not emotional when they are trading. It's not using a lot size that is way too big for their account. It's not understanding technical analysis. The biggest mistake that traders make is perfection paralysis. Thinking about what if situation and never start trading. That is the biggest mistake that traders tend to make. We suffer more from our imagination than in reality. I forget, is it Seneca or Epictetus that said this? It's one of those Stoic philosophies. So what this means is that a lot of times when we encounter certain event in life, it could be negative or it could even be positive. Our minds start to think that, oh shit, this is harmful to us, right? This is bad for us. And that is your imagination talking. In reality, the event has no effect on your life. It's how you interpret it that has an effect, right? Whether you treat it as a good thing or a bad thing, that is what essentially you will feel, right? You'll feel happy if it's a good thing, you'll feel bad if it's a negative thing. So what does this got to do with trading? You see, a lot of beginner traders, right? They will sit there and study trading courses, and they will watch multiple trading videos, read a bunch of trading books, and then they will sit there and just continue learning and learning for months, for weeks, and they never start trading. They start thinking, oh, what if I haven't really mastered trend lines yet? What if I haven't really mastered supply and demand zones yet? Let me tell you something. The sooner you make mistakes, the sooner you'll become successful. If you think about that quote that I just mentioned to you, would you start? Would it cause you to start? Of course, because you will start right now and you will know that one day you will succeed at trading. But you can't succeed if you don't make mistakes. And as traders, we will all make mistakes at the start. Let me tell you something. In my first year of trading, I've blown multiple accounts. I've lost 20 or 30 trades in a row. Like imagine you go to your MetaTrader 4 and you see negative to negative. All your trades, you've just lost all your trades in just 2 days. You lost 20 trades in just 2 days because you were just so emotional over trading and you make all the beginner trading mistakes like revenge trading, over trading, all this shit. But I made that mistake and I journeyed it and then I learned from it. All these losses are only losses and mistakes if you do not learn from it. That is why I always say the sooner you make mistakes, the sooner you become successful, right? Stop thinking about what if situation and actually never start trading. Focus on the problem when it arises itself. So right now, if you are sitting over there watching my videos but you haven't started trading on a demo account or live account yet, you need to start, brother. How the fuck are you going to become successful if you don't start? Another story. 3 years ago, 4 or 5 years ago, before I even start trading, I was actually into entrepreneurship. So I started a real estate startup, right? I wrote down the business plan and then I will go create this beautiful logo and I will think about, wow, what should I name my business? And then I would literally try to basically procrastinate the act of actually starting the business itself. So I did all this shit. I gathered my team. We had a lot of meetings thinking about how we can make this idea better. And then we were worried about, oh shit, what if there's no investors that invest in us? Oh shit, what if the market is too crowded, the market is too saturated? Oh shit, what if the timing is just not right? And we keep on thinking about all this what if situation that never actually happened yet. And then in the end, we never execute the idea. We had all this startup idea, we had a company logo, we had the business plan, we had everything in plan. But we never actually executed it. We had never actually started it. And we never got rich. And we didn't change the world. Because I did not execute on my idea. I did not start. And it's the same thing with trading. Now, with trading, right, how my trading journey went was that I spent about 2-3 months really studying the trading courses. and just really learning everything I can about trading, and I just started a live account. Literally, after 3 months of learning, I started a live account. I'm not telling you to do that because that was purely a mistake. I started a little bit too early. It should be at least after 6 months or after you have a consistently profitable track record on a demo account first, then start your live account. But I started a little bit too early, but it was kind of a good thing because I started so early. I made a shit ton of mistakes. I lost a whole lot of money. I blown a ton of trading accounts, and I learned from them. I learned, okay, shit, I shouldn't do this. I shouldn't do that. I shouldn't do this. I shouldn't do that. And it helped me improve as a trader much faster, right? I got past the learning curve much faster than other people who started only after 1 year, because they will always think about, oh, what if the timing is not right? What if I'm still not good enough? All these what if situations that are clouding your mind. So I ran this mentorship about 3 years ago, or rather 2 years, I forget when is the exact date, but I had 2 students. One guy who was constantly worried about making mistakes, and then the other one who only solved the problem only when he encountered it and he's not afraid to make mistakes. Which one do you think make the most money? The guy who is constantly worrying about mistakes and never actually start live trading, never actually really apply the knowledge that he learned from the mentorship? Or the other guy who started live trading, make a bunch of mistakes, learn from them, and improve as a trader? Obviously, you're going to say the other guy who is not afraid to make the mistakes. It's just like in life, right? I just feel like growing up, we've been conditioned to think that mistakes are bad. And that is why when it comes to trading, we think losses are bad. But like I said, we suffer more in our imagination than in reality. Losses itself, they are not bad. They do nothing to your mental state, nothing to your emotional state. But how you interpret it, how you react to these losses, that is what causes you to suffer in trading. Sit there and cry about all the losses and just dwell on how you are a shitty trader, or you can learn from all these losses, journal it down, and think about how you can improve so that you don't make these same mistakes over and over again. This was how I personally improved as a trader. I treat losses as lessons, and I look for lessons in every single losses. Now, I'm not telling you that every single loss has a lesson, because you must understand that at the end of the day, the market is random. Sometimes you can lose a trade even though you follow your trading plan, you follow your trading strategy, you have all the confluences in the world, you set a proper risk to reward, but you still end up losing the trade because the market is random. The market is unpredictable. That is just the nature of the market, and you just have to accept it for what it is. So, what I'm saying is that don't be afraid to go out there and make mistakes. Don't be afraid to lose money. Because at the start, we are all going to lose money. I lost money. George Soros lost money. Warren Buffett lost money. All the great traders you see online all lost money before when they started. Nobody can just go from 0 to 100 in, 7 days? Nobody. But what we all did, what all profitable traders does is that they look at their losses, they track their data, they see, okay, what's working and what's not working, and then they eliminate all the things that is not working and focus on trading the high probability trade setups, focus on tracking their trades, journaling their trades so that they can really look through their thought process and review their trading journal so that they can improve as a trader. All these things are what a disciplined trader does, and that is what I have been trying to preach for the past 3 to 4 years of my trading journey, because I know that whatever video that I'm making right now is directed to my younger self. I want to help my younger self to become profitable much faster than I did. So if you genuinely take into account all this advice that I'm giving you guys for free on these uncut trading episodes, I can guarantee you that you'll become a much more better and a much more disciplined trader. And when you do eventually become a disciplined trader, the profits just come as a process. I mean, as a product, as a byproduct. I always say focus on the process, not the outcome. Focus on the journey, not the destination. And nobody listens to me. Everybody thinks that, okay, you know what? I jump into trading, I'm going to become rich in 1 month. And that just causes them to lose even more money because they're rushing the process. They're not trusting the process. So generally, I just hope that you guys understand that whatever I say here, it's for your best. I'm trying my best to help you become profitable, and I can't do that if you don't help yourself. If you trade the wrong mindset, you will never ever become successful at trading. So stop sitting over there thinking about when is the perfect time to start. Stop waiting for the stars to align, then you can start trading. Start now. Once you have learned the basics, the fundamentals of trading, go onto a demo account and start testing the strategy. Backtest on TradingView or something. Just start doing something right now. The last thing you should be doing is watch a bunch of trading videos, scroll a bunch of trading TikToks just to get the dopamine levels up, and then not executing. Because remember, it's not learning that will make you rich. It's applying that will make you rich. It's the execution that will make you rich. And I just wish that my younger self knew that earlier. Because if I executed earlier, if I started the real estate startup and I actually executed it, I probably could have become a millionaire like 2 years ago or something. Maybe not. Maybe because it's a shitty idea. But you get the point, right? Start early, fail, and then reiterate. Think about what went wrong so that you can improve as a trader, so that you don't make the same mistakes over and over again. That is how you can become a better trader. Generally, that is the only way. If you want to become a consistently profitable trader, this is the only way. There is no other way. There is no secret hack or holy grail to trading that will make you rich. The key is discipline. That's the key ingredient. Without discipline, nothing is possible. Right? So you can stop sitting over there trying to look for the perfect trading strategy. Stop trying to write out the perfect trading plan and just start. With that said, like I said, all these uncut trading videos exist to serve you guys. I believe that's my purpose in this life. I'm not trying to become the best trader in the world or make the most amount of money in trading. If I want to do that, I won't be making these videos. I'll just be fully focused on trading. But making these videos and serving you guys, helping you guys are what makes me genuinely fulfilled and happy and have a purpose in life. Right? I don't feel happy when I make 100k in trading or I make a shit ton of money from just trading. I feel happy when I make these free videos for you guys, and I just hope that you can just appreciate them and learn from them and actually apply the knowledge that I'm giving you right here, because all these are wisdom to my younger self. So that's it. As always, remember, you're just one trade away, and make sure you go watch Uncut Trading episode 1 if you have not.